I would say I would be looking at gold to be at 5,000 by the end of the Trump administration. Well, it could be by Christmas at this rate. So if you think, and I've been saying it, my theory is gold is for war. That's why countries keep it. All the countries are buying it to put it in their warehouse just in case the worst happens. Gold is for war. If you're thinking gold is for war, Trump gets in, declares trade war with China, boom, up it goes. Yeah, so that my thesis that gold is for war, Bitcoin is for flight, matches what we're seeing. Gold heading towards 5,000, silver heading towards $100 an ounce, and to be honest with you, it's scaring the living daylights out of me.
Clem Chambers is a seasoned financial commentator, author, and entrepreneur. He co-founded the financial platform ADVFN, currently serves as CEO of Online Blockchain PLC, and has written for publications like Forbes. He is known for bold macro calls, especially in precious metals, crypto, and market cycles. In a recent talk, Chambers laid out his bold prediction: gold rising to $5,000 and silver reaching $100 during the Trump administration. He argues that precious metals aren't speculative assets, they're strategic war hedges. Countries accumulate gold in vaults as insurance against global conflict, so when geopolitical tensions escalate, prices surge. He contrasts gold with Bitcoin. Gold, he says, is for war. Bitcoin is for flight.
When you're in a rally, it goes at sort of like a 45 degree. When you're in a boom bubble, something bad's happened, it goes vertical. It's going vertical. And if you plotted gold from when I went, oh, look, it's broken out, which was 2000, whatever it was, I'd expect it to go at 45 degrees, not at vertical. And so, I would say I would be looking at gold to be at 5,000 by the end of the Trump administration. Well, it could be by Christmas at this rate. So if you think, and I've been saying it, my theory is gold is for war. That's why countries keep it. All the countries are buying it to put it in their warehouse just in case the worst happens. That makes the price go chunk, 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 chunk. Well, the moment it does that, either other things are happening which you haven't thought about, or bad things are on the way. So that's why I'm not very happy at the moment, even though I'm coining it. So the only thing is, David, is that you could think about the US government shutdown. That makes people worried. That makes them worried that the dollar will be going down. That it's all sorts of reasons to run for cover. And you run for cover in precious metals. And so that's one way of explaining it. But, America's gone through shutdowns on numerous occasions before, and they're not really shutdowns anyway. They still pay the Social Security. The soldiers still march. Most of the offices are still open. Yes, Smokey Bear in Yellowstone has had to, take a day off. But, it's not such a massive big deal because it's happened so many times now. So you could put it down to that. Now, what you can also put it down to is the Treasury is obviously printing like crazy, and it's doing it because it held back cash before the shutdown, because it always does, because it saw it coming, and you don't have to be a genius to work out it was. And then it flushes the system with cash. It's also, if you look at the bond curve, looks like they're monetizing the short end, i.e., when a short-term bond comes up, they're not replacing it with a new bond at the short end. They're just handing out cash, and the cash goes into the system. The banks literally have a real-time feed of seeing that money coming down the pipe, and they take it and give it to people who want to put it into risk assets, and they do it themselves as well. So that puts a bit of upward pressure on things like gold, things like silver, things frothy assets like Bitcoin, and the stock market, and you're seeing that. So you can put it down to that. And finally, rather than the four horsemen of the apocalypse, you could put it down to retail FOMO. Now retail is getting FOMO because the price has moved so far. The sort of people that say, oh, my next door neighbor bought a new car because he had silver and he bought it at, $2 an ounce and sold it at 45. Oh, I need some of that action. And that FOMO, which is the curse of the private investor often, because, they have short-term joy and then have long-term grief. That FOMO, I think, is now starting to be underway, but it could run a long, long way, that. So anyway, I wish it would go slower. It's going too fast. I mean, my premise, as your viewers will remember, is gold is for war. Well, I'm talking about a slow plod up the mountain of tension, not a sudden rush into the apocalypse. And, if gold is for war is the thing, and all of a sudden gold starts to go vertical. I mean, it was going vertical, but now it's gone vertical, and silver's gone vertical. And, palladium is gone vertical. And palladium is not under sanction from Russia because America can't do without it. So then put sanctions on platinum and palladium because it's a vital metal, and there's only three places that make it: America, South Africa, and Russia. And palladium, psh, so gold going through the roof, silver going through the roof, palladium going through the roof. It's if you believe gold is for war, you've got to be starting to shake in your boots like I am. Fortunately, and Bitcoin, of course, Bitcoin is for flight. Bitcoin's been doing that, but fortunately, it came down $3,000 in the last couple of hours, and I feel a little bit relieved because if that had gone straight to 30,000, I think I'd be digging a trench. If gold is for war, gold at $5,000 is a pretty scary signal. But yes, I mean, another thought is, well, if gold is at this price now, and most people aren't even thinking in those terms. Yeah, I mean, there's terrible things going on in the Ukraine. Yeah, Pakistan and India had a bit of a punch up. Yes, it's pretty awful in Israel and they blow up Iran and all that. But it's not the big one. And the big one is US versus China. And not everything you're seeing is US versus China. Well, what's the price of gold then? I mean, it doesn't. I can't even wrap my head around that one. So you've got this situation where it could really, 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 really run, but then you're getting into a fog of the unknown that is so thick. It's very hard to guess what to do. And right now it's just running hard, and I literally spent a large chunk of this weekend. I'm on holiday in Greece. But I still spent a large part of this weekend trying to work out other explanations for these fast price moves, these fast markets. That wasn't something awful. And that the three things I said earlier were the best that I could come up with. And it's still not satisfying to me. The bond yield is a political thing these days. And people like the Treasury and the Fed have as much control over it as they want to have until suddenly they would lose all control. But that's miles and miles and miles away. And they can bend that curve and they can twist that curve as much as they want. And they will. Again, interest rates are coming down in America, and therefore bond yields are going to go down and bond values are going to go up. That's and the dollar is going to go down. Because if you think about you've got to be a Trump whisperer, God forbid, and he wants to reindustrialize America. He wants to bring it all back home. He wants MAGA and all that stuff. Well, that means having a more competitive basic set of industries. And for that, you need a weaker currency. And for that, you need lower interest rates, right? So people can borrow money and build factories and build shipyards. Well, so lower interest rates, higher inflation, weaker currency. And that's how you get a very quick acting boom. That's the old fashioned boom bubble economics. And that's what America's going to get. And a lot of people are already running from that. And you could say that's why gold is running, because it's all about the dollar. Well, when you think it's all about competing with China, not necessarily in a very friendly way, then you've got the second string of gold going up, which is gold is for war. So you've got these two horses of the apocalypse running. And you're starting to see uh, disruptive markets appearing. If you look at inflation, it isn't necessarily bound to those sort of numbers when you have a economic dynamic where countries print money. And it's the printing of money and the monetization of money that creates inflation. So it's your money supply, not your employment situation, not whether you've got high employment or low employment. That's only in a sort of steady state situation, old-fashioned situation. And I don't think we're in an old-fashioned situation anymore. I think that's gone. We're now into a new era that's very fluid. The good news is you've got AI. The bad news is you've got NS, and I call NS is natural stupidity, and we're seeing plenty of that. And they're the two things you've got. You've got this ever increasing drumbeat of global stress, which is totally unnecessary, totally ridiculous, totally damaging, totally awful. And then you've got this drumbeat of ever increasing technology, which hopefully will get us into a good place before the other lot get us in a bad place. But so you've got, I mean, I think, so I understand that lots of companies are kind of freezing their hiring because they're seeing how much they can replace with AI rather than hiring people. I mean, so that will put pressure on your jobs market. And AI could be quite a deflationary thing because if robots are making your sneakers and you don't have to have people in there, your cost of goods goes down. And you get into the situation that imported deflation into America when China was doing it. So you've got all these disruptive influences coming out of AI. Yeah, people spending trillions on server farms, us running out of energy and copper and all that stuff. That's massively disruptive, but potentially massively positive. And then you've got this global stress stuff where everybody's trying to be the big I am, and which is pushing us towards terrible situations. So and that is creating market conditions that are very, very volatile. And if you think that Bitcoin could be $1 million a coin, the answer is correct if you had runaway inflation in America. I mean, you could have $100,000 beers, like they did in Germany in 29. Not that I think we're going to have that, but I think we've passed a point of stability and we're going into very, very chaotic situations. And entropy is going to go up a lot and cause all sorts of wild outcomes. And of course, for the trader, that's brilliant.
He suggests that as fiat currencies degrade, wealth will flow rapidly into metals, causing vertical price surges rather than steady climbs. Recent metal rallies, according to Chambers, are being fueled by factors like U.S. monetary expansion, bond market liquidity injections, and growing retail FOMO. Chambers warns that those stuck in cash, government bonds, or fiat investments may be the biggest losers in the next wave of monetary disruption.
I look at silver as the fast horse. Okay. So, gold starts to move and everyone goes, well, what's going on there? I don't understand. Gold's going up. Gold's going up. I don't understand. Maybe central banks are buying it. Maybe countries are buying it. Oh, well, that's interesting. Maybe I need to buy some gold. Gold's going. Oh, what about silver? What about silver? Oh, it hasn't really moved much yet. I think I'll buy some of that. Oh, that's bound to follow gold. And in they go. And then you get the momentum up. And once the fast horse is running, it's running. And it's also what I call it retail gold. Yeah. Because if you're a normal Joe and you think, right, I want to buy silver, well, you can obviously go in the market and buy it as ETFs, and that would be a sensible thing to do. But a lot of people go down a coin shop and they'll go, show me some gold. And they'll look at this tiny little bit of gold and they'll go, oh, that's quite expensive. Show me some silver. Oh, I get a sack for that. I get it's only 50. I can get, I can get best part of 80 of those coins for the price of one of those gold ones. I'll have that. Give me a sack of silver. That sounds good. So it's more the retail. And of course, retail is much more frothy than institutional. So when silver starts to run, it runs fast and it also can run more. So you could see gold go another $1,000, say, for example, and then see silver double. And so, in a sense, if gold started to slow, if you wanted to play the trading game, you'd flip into silver and see if it carried on running because it's quite capable of running after gold stopped because, you know, B to G, business to government, that's gold. B to C, that's silver. And then if you want to look even further down into the land of obscurity, you've got platinum and palladium, which used to be 1 to 1. And they're like 3 to 1 at the moment. I mean, is it three? Yeah, roughly 3 to 1. Maybe not 3 to 1, two and a bit to 1 to gold. So they could double just to get parity with gold. And so, you've got all these different variables going on like crazy. I mean, another one to think about is, I mean, silver is thought of as very important with the AI revolution, but stop and think about how much is made. 3,200 tons of gold, 25,000 tons of silver. That's 8 times. Well, if silver was 8 to 1 to gold, that would be a wonderful world. Unless suddenly peace breaks out and Donald gets his Nobel Prize, it's going to go way further. I mean, gold, if gold just keeps trundling up, well, it's not trundling. If gold keeps going the way that it's going, or even if it slows down and starts to trundle a bit, it's silver's going to go quite a long way past this. And I mean, does anybody think it's not going to go smashing through 50? I mean, why wouldn't it? I mean, you could say, well, gold is toppy now. You could make an argument for that, and I wouldn't, but you could make an argument for that. Oh, gold's had its run, it's all good, and it's not, it's enough. But it's quite difficult to do so. But if gold just continues to do what it's doing, even at the 45 degrees rather than the 90, silver will run and run and run. And $100 is I mean, I thought $100 was a stretch only a few weeks ago, but now it seems to me to be a reasonable projection, a reasonable destination, not a dead cert. I mean, $50 now that's looking like a dead cert. Didn't look like a dead cert 3 weeks ago, did it? I'm going to start sweating if it gets into the 4,500 plus zone, and I'll be hanging on, I think. And if it goes through 5,000, the more it goes up, the more I'm going to be sweating when it's near 5,000. Okay, so trees don't grow to the skies as they say, which doesn't mean a great deal, but it means that things don't go up forever. And I've had a good run, and I always get out not at the top, not over the top and back down the other side, but normally about two-thirds of the way up. So if I get out of 5,000, it's going to eight. But I'm worried about the velocity of this move, not about the number. So I'm cool with that. I mean, I am now, I think, moving into American defense stocks because they look like they're starting to run. And, the defense stocks in Europe have run, and in the UK they have run. And if you look at Lockheed Martin, its recent performance is, say, August. Oh, that's an interesting looking chart. I mean, you don't often see stocks do that, what it's doing, which is not a big move, but it's just going accelerate. And that's what I look for in charts. I look for accelerations, and certain patterns do certain things. Up like a rocket, down like a rock, accelerate. Just keep going up like that, smooth as silk. All those sort of things. And I look for those patterns because they tell you about the underlying dynamic driving that market. Well, if you look at Lockheed Martin, I think they pay a 2.5% dividend. I mean, give me a break. Yeah. And they're on an 18 PE when the S&P is on 28. Give me a break. And all of a sudden, and everybody's shouting at everybody, and now China's helping Russia fight the Ukrainians, and America's going to send cruise missiles, maybe, maybe not. Oh, blah 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 blah. And then your defense stock starts to do that.
He believes the coming upward thrust in gold and silver is not a normal bull run, but a structural realignment in a broken financial system. If you want more insights like this, subscribe to the Metal Bar, your hub for gold and silver analysis, macro predictions, and hard asset wisdom.